Hey everybody, welcome back to our daily GameStop review video. Yesterday we were up about 5%. Today, retracing 2.5, giving most of it back, and not being able to reclaim the 50 exponential moving average on the 1 day, which is a bit of a bummer because it's been acting as a little bit of a area of resistance, right? So that's not great. Good news though, we are holding to 21. So maybe we can kind of begin to consolidate between the two and break back above the 50 and challenge the 200 and the lower band of the daily gap coming here soon. On the looking at it from our 1 day now down into intraday here, not great structure, right? So we did have a massive run yesterday. So probably a lot of people taking profits on those weeklies because they didn't just buy them yesterday. Lots of people bought these contracts last week, maybe the week before, and they expire this week, right? Theta is getting close. It's a short week as well. So you need to take those profits when you get them. And then because of this, the hedge kind of falls off, right? Because there was a lot of weeklies, right, that were kind of getting pushed in the money. So technically speaking, we see some volatility in the morning because of that. And then when we break down VWAP, fail to reclaim it, you kind of know it's going to be a bearish day, right? Acting as a point of separation here for us, where we fail the reclaim, don't even get close to a reclaim here. That's just a hard rejection. Fail the reclaim again, at which point we have a break of structure on the bearish side, which is brutal, right after our order block, which is when this breaks that order block is formed, when it blows out the low, right? So, this is like textbook short position where you lose VWAP, fail to reclaim it, and then take out your daily low. You just take a short position, stop over VWAP, slice it down. I don't do that, but that's what the chart says. Figure I'd teach you guys just this setup. Typically, GameStop has no trading setup, so it's kind of interesting to see one. It's going the wrong way, though, so we don't appreciate that. But again, I think it's because, the IV is coming up. We're getting closer to earnings. That translates from implied volatility to realized volatility. And, people are taking profits, which they should. The more profits they take, the more option contracts they can buy next time, right? And then we break down. So still a couple days to the week, right? So people may even reload back up, right? After a down day, because you got to remember, not everybody's closing out down here. And if you didn't close out here, my gosh. But a lot of people are just closing out right in the morning after the run. As soon as it opens, take your profits, right? And then they can buy back in on the low tomorrow while having dodged a full day of theta decay when there's only 4 in the week, and B, a retracement in price. Because if you didn't, all of these gains would have been evaporated, or the majority of them. So, yesterday these contracts were up 200%, 220%, some of them. A lot of them getting melted, down 70%, down 50%, right? So you would be giving back, maybe not all, but a lot of those gains where you could, at the very least, be scaling out, reducing your risk, right? Just how to be, responsible trader. With that being said, Max Payne, chilling, 2250 still. I kind of expect this to move up to 23 before Friday, and then we'll start to roll Max Payne up, because you got to remember that Max Payne is like a lagging indicator almost. I use it as an indicator, but it's the output of the options chain, right? That gives us this. So when the options chain builds, Max Payne will rise, right? And we'll see that be adjusted automatically. With that being said, we're kind of just right at it. We expect that. We like to blow through it. things get pretty risky in my experience when we're about 25% plus max pain. Typically, that's where I look to take advantage of it, but that's in another video. Our IV is actually, I think, down a tiny bit today, but price is down, so you expect that. You don't have to pay for this. You can just use the summary window here. That tiny window does get updated for free, where you can just see current IV, you track it, right? Institutional ownership doubling, don't be worried about your investment. If the big dogs are, going long, you're in good hands. And the 30-year yield or whatever with these treasuries, maybe this squeezes. People are saying, oh, they're going to start selling the treasuries, and that's going to crush the U.S. economy. But what if it just squeezes? I don't know. I'm not an economist. So not much to cover today. 6 days till earnings, and we can kind of maybe take a look at the option chain. A lot of 23s, a lot of 25s. Hopefully all being sold green. They ain't green no more. Well, there'd be less green if you bought them yesterday. And then some puts on here as well, 22.5. That's fine. Bringing it back down to max pain. You expect that. Looking at the kind of the open interest on the week, so that put side is here. I wouldn't want these 18.5s, so that's a little aggressive, isn't it? But these are old. These are probably going to get melted. Someone looking at that manipulation leg, maybe. Moving out. And I don't expect a lot of loading, at least to start the day, maybe to end the day. But we'll just have to compare open interest here. I would expect these puts to have been loaded today, right? And then, just like how we explain, well, people are taking profits on their longs, on the calls, and that's going to drive the price down from the hedging. So too will the short players take profits the exact same way. And then that, now they upwards pressure, right? So I would prefer to see the volume on the puts on a red day than have a red day with no volume on the puts, right? Not spending too much time on this. 3.5. That's pretty, like, a lot here, by the way. That's kind of crazy. September 19th. So again, we mentioned that yesterday where, okay, we were looking at the 17th, but maybe now since we're getting so close to earnings, we can target in a bit. We don't need so much data. And that 19th seems to be the day. Very busy. Busy on the put side too. It's nice to see both sides because it does take two to tango. 26s. These are here. And again, basically just looking at the open interest every day, comparing it to the previous days. Are we building up? Are we shutting down? And then looking for anomalies on that day to look for tomorrow on the volume, right? A dead week. A lot of 23s. Which is that's good. I'd like to see some 21s too. 21s, 22s, 27s, fill in these gaps. And that's that kind of thing. Like, so there's a gap here at 27 on the 27th or the 17th, but on, say, the 19th, that gap's been filled, right? Things like that. So it's the specific strikes can kind of be filled on different days, and you just don't necessarily see it when you click through it. It would almost be worthwhile to overlay them on top of each other. If you could get a standardized access, right? Because they're each different depending, and I think you could do that, right? Just with this. You could overlay them all and compare the entire chain at once visually. I would like that. I'm a very visual person. Moving out though, I don't see too much that we're not already familiar with. There's not even any volume there. A lot of 35s today, though. Oh, wait. And we've seen when we have access to these 35s that the 10s and 5s have been pouring in too. But it just, and it's not like they're not. There's still a lot there, but it's being dwarfed by the 35s, right? Okay, but what are these 50 puts about? Those are aggressive. Someone's selling 50 puts? Who's buying those? What the hell? Interesting. Interesting. These two spikes, these 10s and 50s. This is a strategy of sort, isn't it? 10 puts, 50 puts, and a massive 35 call? What strategy are we looking at here? This is an iron condor? I have no idea. It might be, it might be. Well, look, it's the bird. You can tell. I'm just kidding, I'm just kidding, I'm kidding. An absolute buttload. Oh, that's open interest. But still, 20K. These 3 puts. I don't know. I don't know what's up with these puts. They're never going to be profitable unless it's straight up like a Vega play, where when the stock gets volatile, the price of the puts goes up as well. Could be, because they're not going to intrinsically appreciate, I don't think. I don't know. Like, we're never going to get lower than we are now, right? And even if we do, we're not getting close to that. So these must, because I don't trade them, I'm not certain, but I'm thinking that when, you know, IV spikes, or just Vega volatility, that the price of these contracts is also going up based on that. Because they're probably worthless, but when that hits it, they're probably worth a little bit or something. And then you're simultaneously able to bring downward pressure on the chain. I don't know. I'm going to take a look into that. Maybe I'll have an answer for you guys later this week. It's been busy. Every day's so busy running 2 channels and the regular life as well, right? So, hopefully GameStop can squeeze and, you know, we can take a breather, at least on some of that other stuff, right? Anywho, we'll see how the market is tomorrow. Always updating you guys if the stock starts squeezing. You know, if we get 20% candles, I'm going to be online for you guys. Pull up the charts. Of course, celebrate. I have a playlist I'm building. Mother of all 6 songs. I had it pulled up. Oh, here it is. If you have a recommendation, throw it in the comments. I'll add it to the playlist, right? And just hanging out, waiting for the inevitable, right? It's been a long couple months, though, right? So hopefully the period between this earnings and next earnings is not as stagnant as this last section has been, right? Hopefully we can get some opportunities in there, some price improvement, and maybe learn a couple things along the way. Not much for you guys today, but they can't all be absolute bangers. Hopefully tomorrow's a little bit better. This weekend, we'll take a look at some more indicators. We'll save that for the weekends where I have extra time. And cheers. We'll see you all soon in the next. Take care.